After the Bank of Canada's 0.5% rate increase in December, there was some hope that rates would stop rising. The bank shifted from a stance of, yes, we're going to raise rates further, to a, we're going to watch the data and decide if further rate increases are necessary. This shift in language was rather significant, but not enough to calm concerns about further increases. Since March of 2022, the bank has now increased rates 4.25%, and most of the announcements that they've made along the way have been increases of 0.5% or larger, which is significant compared to the more normal 0.25% interest rate changes to their rate. And what this does with the new rate is it brings the prime retail rate up to 6.7%. And so variable rate mortgages, depending on the discount you have from prime, are likely to be somewhere around 5.8% for most variable rate mortgage holders. Separate from this rate announcement, but related for anybody who is looking for a mortgage or considering locking into a mortgage from a variable, new insured 5-year fixed rate mortgages can be had for under 5% in most cases. And it's different because fixed rate mortgages, they change when the bond rates change, which is a different metric than what the Bank of Canada's rate relies on. So with today's announcement, there's a growing consensus that the Bank of Canada is done with its rate increases, at least for now and hopefully for a long time. This has been the most aggressive cycle of rate increases in decades, with these 8 consecutive increases. Housing markets across the country, in the markets that really needed it, have already softened significantly. In advance of the increase today, BMO Capital Markets Director and Senior Economist Sal Gattieri said that he sees today's move more as an insurance against the inflation outlook. When asked what to expect this year, he told BNN Bloomberg that rates have risen enough and that the economy will enter a shallow recession in the first half of this year, and that he expects the bank to sit on the sidelines while it monitors and sees the impacts of the rate increases that have happened so far. Today's announcement matches that, also pointing to growing evidence that rate increases have slowed activity, especially household spending. Consumption has moderated from early 2022, and housing market activity has declined substantially. The bank predicts that this overall slowdown in activity will allow supply to catch up with demand. This is economy speak for saying that inflation will return to the target range. And so I'm excited to tell you that the bank thinks that this will be the last increase. They've said that if economic developments evolve broadly in line with their outlook, that they expect to hold this rate at its current level while it impacts the assessment of these increases. Looking briefly at the most recent projections for rates from the 6 major banks in Canada, half of them expect rates to remain the same from today through to the end of the year, with the other half predicting some rate drops between 0.5 and even 0.75 of a percentage point. Personally, I think we're going to stay the same. By the end of 2024, all of them, except for BMO, and BMO is the exception only because they haven't provided a projection yet, they all expect rates to be 1.5% lower than they are today. So based on these major bank predictions, I think that we're going to see rates more or less where they are today until the end of the year, and then back down to about, maybe below 4% by the end of 2024. And when I say 4%, I'm referring to mortgage rates that you're able to get. Alberta's real estate market remains strong. In the lower priced part of the market, realtors are reporting multiple offers and less flexible sellers. We didn't have the same price increases that we're seeing elsewhere in the country, and we're not really expecting much more downward pressure as a result, unlike those other markets. Both Calgary and Edmonton do remain some of the most affordable major housing markets in the developed world. So if you're considering a purchase or are looking for any advice regarding your existing mortgage, please reach out to me and my team. We are here ready to help you out. Thank you.